In this video, I'm going to talk about reverse charge VAT on purchases. Okay, so let's talk about what reverse charge is. I'm talking about reverse charge on purchases, not on sales at the moment. So reverse charge is a mechanism where the supplier does not charge VAT. Instead, the customer deals with both the sales VAT and the purchases VAT. So the reason for reverse charge VAT is twofold. First of all, it's often used in circumstances where there might be VAT fraud. And secondly, you'll see it being used where the supplier is not VAT registered in the company where the supply is being made. So if you had a normal purchase with VAT, you would have the purchase cost plus VAT, which you would reclaim. So in this instance, you have no VAT being charged to you, and also you have no VAT to reclaim. But on your VAT return, you will record it as if you have the output VAT, the sales VAT from your supplier, and the input, the purchase VAT that you would normally reclaim. So let's talk about some examples where you might see reverse charge VAT. Here's a good example for us to look at. It's a Stripe invoice. Now thankfully the Stripe invoice does say that the reverse charge VAT may be applicable. So you can see the Stripe address, you can see that they're based in Ireland, you can see Stripe quote their VAT number, their Irish VAT number, and they will also quote the customer, i.e. your UK VAT number. When you look down at the bottom of the invoice, these amounts are quoted in euros and in sterling, but you can see on the line that says total VAT, the VAT amount charged is 0. So here's an example of another reverse charge invoice to take a look at, one that I see very regularly. So it's a monthly invoice from Google. We can see it's from Google Cloud EMEA Limited, again based in Ireland in Dublin. They've quoted their Irish VAT number, and again we can see that the charges do not include any VAT. Now although this invoice doesn't say anything about the reverse charge, we would still apply the reverse charge. I've looked high and low to try and get absolute confirmation that this is the case, and I've really struggled to do it. The closest thing I've found is that there's no longer the requirement for Google to say that on the document because this invoice has not been issued to an EU country, i.e. because the UK are no longer in the EU, Google do not need to state on their invoice that the reverse charge must apply, but the rules haven't changed. There isn't anything different, so we would still apply reverse charge to this invoice. Okay, let's head into Xero and take a look at what we need to do. We're in Xero, and if we need a reminder where our VAT codes are kept, we go to Accounting, we go to Advanced, we go over and we select Tax rates meaning VAT rates. I have another video about tidying up our tax or VAT rates, but we haven't done that in this instance. But if we look down the list here, we can see this is the VAT code that we're going to want to use, reverse charge expense 20%. So we have our Google bill, we've entered the details, we've chosen the code, IT software and consumables, and then we get to the tax rate. Obviously the tax rate in our Xero account for this code is 20% VAT on expense, but we need to change that. So we go to the drop down and we head to the one that we need, which is reverse charge expense. And now you can see when you've done that, yes, it says 20% because that is the rate of the reverse charge, but it's removed the VAT from that invoice. We're happy with this. Now we can simply approve. I'm now going to show you what your VAT return looks like. We're not in a real company, so we can't use the VAT screen that you would normally see, VAT for MTD, but we can still get to VAT. And the good thing about this is we can simply look at only the one transaction that we're interested in. And we know it's dated the 31st of December, so that's the date range that I've chosen. And then we can look at the actual VAT return and see the impact of that transaction. So box 1 is our output VAT, our VAT on our sales, and we see £1.20. So it's 20% of the £6 charge. So it's clearly not our sales, but we're accounting for the sales from Google because they didn't include VAT on their sales invoice to us. But then at the same time, when we get to box 4, the VAT on our purchases is the same amount. So our input VAT has the same amount. So we have output VAT £1.20, input VAT £1.20, nothing due to pay. And then the boxes for statistical purposes, box 6, the sales value is £6, and box 7, the purchase value is £6. So it has no impact on the VAT that you have to pay, but the reverse charge mechanism means that you are accounting for both the sales and the purchases. So if we look at the backup to the VAT return, I think the easiest one to go to and make sense of is transactions by tax rate. So here we have the tax rate. So we have reverse charge expenses. There we can see the £1.20, and then we have the reverse charge expenses also being reclaimed. So it's an in and an out with nil effect on your VAT return. So that is accounting for purchases in Xero, where you need to apply the reverse charge VAT. I hope you found the video useful. Remember, I am available for one-to-one coaching if you're struggling with your Xero. And if you're tired of doing your Xero bookkeeping completely, take a look at our website and you'll find out if we're currently taking on any bookkeeping clients. But until next time, until the next video, happy Xeroing.